Joining us for another investment manager presentation in our Quoted Data Around the World webinar series. Today I'm joined by Elizabeth Kwik, investment manager for abrdn China Investment Company. Elizabeth will be providing an overview of the company and the investment team's approach to portfolio construction. So with no further ado, I will hand over to Elizabeth.
Thanks, David. Thank you everyone for joining. So I am Elizabeth, co-manager of the abrdn China Investment Company. The four sections that I will be covering today we will begin with an introduction to the All China universe and its attractions. I will then go through the specifics of the abrdn China Investment Company, the team that runs the strategy and the investment process, followed by key portfolio investment themes, and then closing with an outlook and some of the market themes that we're seeing at the moment. So if you turn to slide 3, this gives you an idea of the breadth of the universe. So when we talk about the All China universe, we're referring to companies listed both on and offshore in China. You can see here that looking in terms of number of listed companies, the A-share universe is the most extensive, with over 4,400 companies listed there. These are companies that will be listed onshore in China, either in Shenzhen or Shanghai, known as A-shares. And we also have a number of overseas listings, for instance, H-shares, which are companies listed in Hong Kong, and also US ADRs. So these are some of the more common offshore listings, and you can see that there are quite a number of companies listed both on and offshore. On the next slide, on slide 4, you will see that this has been adjusted now by market cap. So the number or the difference between onshore and offshore universe is not quite as big as it looked on the earlier slide, but as you can see, both on and onshore provide quite a large number of opportunities. So on slide 5, this is really to highlight that for this company, we are here to capture the full opportunity of Chinese equities. You can see that in this little Venn diagram on the left-hand side, we have the onshore listings where there are certain sectors or industries which are more concentrated on the onshore universe. So for instance, Baijiu, which is a Chinese alcohol, these companies are typically only listed onshore in China, in Shanghai or in Shenzhen. A lot of the specialist technology prefers to be listed at home in China. When you look at the electric vehicle supply chain and some of the EV makers, as well as the battery makers, many of these are also listed onshore in China. And then similarly for food distributors, airports, and duty-free retail. On the other hand, on the offshore universe, some of the names you may be more familiar with, including internet names, for instance, Tencent, e-commerce names like JD.com, Macau Gaming, Hong Kong Exchange, some of the telecom names, as well as travel names. These tend to be listed offshore. So many of them listed in Hong Kong, as well as in the US. And then, we do have some areas of overlap between the two. So pharmaceutical is quite a big sector. They tend to be listed both in the onshore and offshore market. Similarly for auto. For energy and banks and insurance, you'll find that there are many of these stocks that are dual listed. They have both an A-share listing as well as an H-share listing. So for this company, we do not want to limit ourselves to any specific place of listing. The key for us is the business, and so we're open to the full opportunity of both on and offshore listed companies. On slide 6, this is really to highlight that when you're looking at China, it really does provide some diversification benefits. The MSCI China All Shares Index has a lower correlation to global markets than many other country indices. So this makes it very attractive for foreign investors. So if you look, for instance, at the correlation with the MSCI World Index, that's at 0.6, and even lower if you're comparing with the S&P 500 or MSCI Europe. On slide 7 now, this is to highlight the MSCI China A-share inclusion. So as you may know, currently the inclusion factor for China A-shares is not yet at 100%, it is at 20%, meaning that as a percentage of the MSCI emerging market index, China A shares currently only represent 4.9%. But if we were to use a 100% inclusion factor, which we believe will be the case over the coming few years, this rises quite substantially to 24.5%. And China as a whole, China offshore and China A shares would represent over half of the MSCI EM index. That means for us that the opportunity is huge. There will be a lot more fund flows coming in, much more interest from foreign investors that we have already been seeing, but we expect this to continue to increase as MSCI China Asia inclusion progresses. So this concludes the section on the All China universe and why we have chosen to go for this universe. In the next section, I'll just go over some of the key highlights of the company. On slide 9, here are a few areas where we believe we are different and some of the advantages that we have. So first of all is ESG, environmental, social, and governance integration. This is highly embedded into our investment process. We are credible with both our clients and the companies that we invest in. We are highly rated for ESG, acknowledged as industry leading with an A+ rating from PRI, and we are very well resourced on this front. So we have a central ESG team of over 20 members, as well as on-desk ESG specialists. So this really helps to drive high quality research and engagement with our companies. Next, we take pride in the large on-the-ground footprint that we have in China. We have a team of 14 members looking specifically at China with many years of expertise. The team members come from various different backgrounds, different generations, and we're helped by 3 on-desk ESG specialists. The culture of the team is very much team-based. We have a very flat structure. We do not really work in the star manager format, so everybody's voice is heard. And on top of that, we have a very long heritage of investing in China. We have been investing in China for over 30 years, and we've been there to see the market open up to foreign investors. So we're very familiar with navigating the ever-changing landscape in China. So as a result, what we're looking for is to build a high conviction, high quality portfolio of 30 to 60 best ideas. One of the key megatrends that we hope to be positioned for is the focus on consumption, and in particular domestic consumption, which we believe will be a structural driver of the China market going forward. And as I mentioned, we've chosen to go for the full opportunity, not limiting ourselves to either on or offshore. On slide 10, the strategy that we're following is an actively managed strategy focused on bottom-up stock selection. So we are here to pick the best ideas out of the universe to build a high conviction portfolio. It's managed through first-hand research. We believe that this is the cornerstone of our investment process. We don't only rely on analyst reports or second-hand research. Basically, we want to do it ourselves, and which is also why we have such a large on-the-ground footprint. Stock selection is based on this long-term quality approach, and there is a strong emphasis on ESG and stewardship. The management of the fund is not benchmark driven. We make independent decisions, but we are benchmark aware and aware of the risks that we are taking. So as buy and hold investors, we don't only consider ourselves investors, but also as owners of the companies that we invest in. And as I mentioned, the outcome that we're going for is a high quality portfolio. And by high quality, we mean that at the end of the day, we want our companies to be more profitable than the index. We want them to have stronger balance sheets, less leverage, and higher returns. So we hope that the long-term track record of performance that we have across our Chinese equity strategies can demonstrate our capabilities in this area and our management of this investment company. On the next slide, slide 11, this is a more detailed explanation of what exactly we mean by quality. First off, quality investing, the reason that we believe that it works is that the market often systematically underestimates the sustainability of returns from high quality companies. High quality companies, we believe, these are the ones that have fewer tail risks, a greater margin of safety. They also produce less volatile earning streams, earnings that are more resilient and sustainable, especially in a market such as China. We believe this is very important. And we believe that these quality companies can better navigate an uncertain future and capitalize on the volatility or opportunities to create value. So when we look at quality, this quality wheel on the right-hand side is essentially a summary of what we mean by quality. So first thing we look for is a sustainable competitive advantage. We look at the business model and we seek to identify, what makes this business sustainably competitive. The second thing that we look for is attractive industry characteristics. Oftentimes you can find companies that have a good business model, but if the industry itself is not growing, or if there's no pricing power in the industry, then that's not necessarily something that we like. So we want both a sustainable competitive advantage in an attractive industry. Thirdly, superior financials. We do not want to look for companies that are highly leveraged, which will run into trouble, in the down cycle. So looking at, assessing the balance sheet and their cash flow generation, these are all important considerations to us in our quality assessment. And fourthly, management execution and track record. The way we assess, how, we have to assess who is running the company, who is going to decide on the future direction of the company. So that's really boils down to management, and the way we judge management is really by their track record. And then the fifth factor is ESG. As I mentioned, this is highly embedded in our investment process. We don't only look at ESG as something before we invest in a company, but we look for companies that will be progressive, continuously working to improve their ESG standards, because we believe that these things are financially material to each company and not just something that they say that they do. So that is the kind of summary on our investment philosophy of quality investing. On the next slide, slide 12, this is the Asia Pacific equity team. So it's headed up by Flavia Cheung, and in Hong Kong and Shanghai, it's headed up by Nicholas Yeo, who is the manager also of this investment company. He has been with the firm for a very long time. He has 21 years of experience, and the team in Hong Kong and Shanghai here, you can see all the names in blue are the names of the members who look closely at Chinese equity. So there are 14 of us in total, with varying degrees of, we come from different parts of Asia, of China. The diversity is something that we're proud of. We have people from the North China, South of China, overseas Chinese, basically a very diverse set of people, which we believe adds to the team discussion and decision making. So the three names in green here are the on-desk ESG specialists that I mentioned earlier, Jerry, David, and Daniel. They are the ones looking more deeply into ESG issues. They help us to identify which are the key issues we should be focusing on when we speak to our companies, and on how we can follow up and help them to improve as well. So with such a large team, you might ask, who are the decision makers, who is constructing the portfolio? And that's really on the next slide, slide 13. It's what we call an portfolio construction group, or pod. The four of us, Nick, myself, Alec, and Joanne, we are responsible for really just decision making when it comes to this portfolio. We are accountable for the portfolio's performance, and we of course seek to align the portfolio with our best ideas that are proposed from all the analysts. On slide 14, this is really the investment process. So you may ask, how do you go from such a large universe to a portfolio of 30 to 60 stocks? The first step on the left here is idea generation. So with such a broad universe, this obviously means a wide and dynamic opportunity set. We use several ways of screening for new ideas. So firstly, We make use of quantitative tools to refine our coverage. We do simple screening of return metrics, valuation, margins, leverage, all the things that I mentioned earlier, just to see, if there's anything that might meet our quality screen. Secondly is our own on the ground visiting of companies. So, how accessible a company is, how willing they are to speak to investors, so we can, learn and analyze the business. And then another source of idea generation is through our sector expertise. So just doing cross checks through the sector, we can often find players within different parts of a value chain of a certain sector that might be interesting, and these will be, shortlisted for our research process. So we'd have, from a few thousand stocks, the next step of research, this would be a stage of more extensive coverage. So apart from a simple screening, this is really the stage of deep analysis done by the analyst. So basically, the analyst is responsible for doing thorough research into the company, visiting the management, coming up with a research note that will cover things like the moat of the company or the competitive advantage, industry characteristics, etc. And their job is to come up with clear non-consensus insights. These are the stocks that we then rate as either buy, hold, or sell. And then those with a buy recommendation will move to the next stage of a peer review. So a peer review is essentially a stage of a rigorous team debate. So within the 14 members of the Chinese equity team, we are then, we then take turns essentially being the bear or the devil's advocate for a specific stock in order to challenge the investment thesis of the stock that the analyst is proposing. So this is a chance to, look for any holes in the investment thesis, to, share insights, to ask questions, to compare with other peers. And so this is essentially a very rigorous team debate that we have on the stock. And then if this passes this stage of a peer review, then we move on to the final stage of portfolio construction. And that's where the four of us that I mentioned earlier as the pod, we will see whether or not this new idea adds anything to the portfolio. So a company that has reached this stage may have passed the peer review. It could be a good company, but we really want to see, does it add anything to the portfolio? And if so, then it will get into the portfolio, and then we will decide, what kind of sizing or weight. So overall, this is very much an actively managed strategy, as you can see, and throughout ESG considerations will be embedded. On slide 15, I won't go over all the details here, but ESG, as you can see, is really just part of our investment process. We actively engage with the companies that we own for many years after we've owned them, just to seek continuous improvement. And oftentimes, even in China, where many clients may be a bit more skeptical, we actually do see a number of positive outcomes, delivering better risk-adjusted returns. Management engagement does improve corporate performance for clients and for the wider society as well. On slide 17, these are the 5 key investment themes that we would like to highlight. These are the areas in which we believe we're finding the best opportunities. We see the brightest future for firms who are able to adapt to the changing regulatory frameworks and align policy objectives with their business model. So these areas include digital innovation, green technology, access to affordable healthcare, and improved livelihoods. And we basically have focused on these 5 themes that we believe will drive returns. So the first one, starting on the left-hand side, is aspiration. We expect consumer names to fare well as China strives for a self-sufficient economic model. We believe in the story of premiumization. We believe that urbanization is a continuous trend in China, and that with a rising middle-class wealth, this will drive demand for premium goods and services in the long run. So one of our top holdings is China Tourism Duty Free. the largest duty-free retailer in China. This is one of our core holdings in the space to capitalize on middle-class growth. The second theme is the digital theme, and this aligns with the government's objectives of localization, improving productivity, lowering costs, and increasing innovation. We have a number of software names that have advantages given their knowledge of the domestic market and preference for localization in many cases, such as areas of cybersecurity and cloud services. The third theme is the green theme. As you may know, China has a goal of being net zero in terms of carbon emissions by 2060. So very much aligned with that theme. We have holdings in solar wafer producers, component makers, battery and related component makers as well. So, for instance, we have one of the world's largest electric vehicle battery makers in this space. The fourth theme is health. So we are generally overweight to the healthcare sector for this company. It mainly includes firms that do innovative research, clinical trial services, basically bringing high quality therapies to the market more quickly and cheaply than a foreign player can. So our holdings aligned with the policy objective that China is trying to make healthcare cheaper and more accessible, which is increasingly important given the rapidly aging society. And the fifth theme is wealth. So this is aligned with China's policy objectives of becoming a moderately prosperous society by 2035. The financial services sector plays a key role in creating and protecting wealth. It's still relatively in underdevelopment compared to many of the developed countries. So we have a couple of key holdings here, including China Merchants Bank, which we believe are going to be long-term winners. So on slide 18, this is just a summary of our positioning. As you can see, this is aligned with the 5 themes that I just mentioned. So consumer staples and discretionary, industrials is where many of the green solar names or EV related names fall under, and healthcare are the main sectors in which we are overweight. And on the next slide, slide 19, this is where you will find a brief description of the top 10 holdings in the investment company, and again, very much aligned with the themes I just described. So just to conclude, what is our outlook? What are some of the market themes that we're seeing at the moment? Firstly, on slide 21, when we talk about the China market, although there has been a lot of noise and last year was very volatile with news of regulation coming out, you can see that 2021 going forward growth estimates are still quite robust. Although there has been some downward revision in the last quarter or so, growth expectations are still in the teens. And for our portfolio, it would be higher than what the benchmark is showing. Valuation is still relatively reasonable, and especially when compared to the MSCI World or other developed markets. On the next slide, you can see slide 22. The question is, so with all the news and headlines that we've been seeing, what is the government trying to achieve? You can see some of the keywords here that you may be familiar with. So a common prosperity, regulation, geopolitics, national security. They want a moderately prosperous society by 2035. So, what is at the core of this? We believe that it is stability. They are looking for stable economic growth. In terms of, why we think it's an attractive time to be invested in China, we believe that the current global volatility that we're seeing presents a rare opportunity to invest in China at an attractive price. While developed markets such as the US and the UK are continuing to pursue tightening to address inflation, China, on the other hand, has moved to ease its central banking policy and provide more liquidity and access to funding to support the economic growth. Policymakers in China are in a position to support the economy with both fiscal and monetary means, while inflationary pressure is not as much of a consideration at the moment as it would be in certain Western countries. And of course, while COVID-19 has tamed consumption growth over the last 2 years, the absolute size of the market in terms of retail sales continues to increase substantially. So, we don't doubt that, as they continue to pursue a policy of zero COVID, this may, from time to time mean lockdowns and have implication on growth. We believe that, they are able to manage it well for however long they choose to follow this strategy. And overall, the pie is large and continuing to increase. And then the last thing is that the geopolitical environment has really further accelerated Beijing's priority of economic self-sufficiency and innovation. So with all the regulations that we're seeing, we don't think that this is really that the aim of the government is to hinder growth or innovation. We think it's they're very much for innovation, but a lot of the regulation that you saw last year coming out was really playing catch up with how fast some of the internet or e-commerce players had grown. It's not something unique to China, but obviously they came down quite heavy-handed. And on the bright side, we believe that probably the most severe and large-scale regulations and fines have already been handed out. So although we don't expect it to be completely over, we're hopeful that the year ahead and going forward, things will not be quite as dramatic as what we saw last year, and market expectations have also obviously been managed. So just a final few comments on the last slide, slide 23. A couple of market themes for the year: policy support, improving margins, and less news flow on regulation. Resilient earnings and reasonable valuations is what we're seeing, especially for the companies that we own and compared to global equities. And the key investment themes that we are positioned in, we believe, are structural and long-term drivers and opportunities. So thank you very much. If you have any questions, please feel free to let me know.
Elizabeth, thanks very much for that roundup and the overview on Aberdeen China. It was quite fascinating and interesting to hear. So that was very, very helpful. Thanks very much. So we'd like to thank the audience for listening in to our recording and investment presentation today. Please look out for other recordings which will be on our website as part of our Round the World webinar series. You'll be able to find those in the video section of our website, QuotedData.com, and they'll also be available on our YouTube channel. Thanks for joining.